following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you have a mixed market right now. S&P is just negative by 2 points. We've been chopping around pre-market. Let's put it to a 5-minute. Yeah, and just in the last half hour or so, you're trading up by, 30 points? We're trading there 54.10. Nonetheless, S&P is almost flat to the tick as we speak, 54.40. NASDAQ 100 slightly in the green, up by 24 points, 18,959. The Dow getting weighed on this morning by Boeing as China tells their carriers no more taking deliveries of Boeing airplanes, Boeing jets. There's the acceleration when that news breaks. We've traded up a bit, but you're going to face some headwinds in the Dow today because of Boeing. Let's jump over right now. And there's Boeing action. You close at 159. There's the news at 4 a.m. this morning. You drive down to about 152, and we're trading at 154. So Boeing, that's going to hit the Dow disproportionately today. We'll see how that goes. We have Bank of America out with their numbers today. And you have Citi out with their numbers, both trading higher. Decent bank earnings across the board. Bank of America up by about 50 pennies this morning. Citi out with their numbers, up by about 50 pennies as well. And that's on the heels of the other banks that have traded higher this week. So banks kick off earnings season with some strong numbers. We'll see if that momentum can hold as we go further into the season. Crude trading at $61.36. We're negative by 17 pennies. Now, let's jump to yields. Let's jump to the dollar. We got the 10-year right now at about 4.4. We were at 4.39 earlier. 4.39, the yield on the 10-year. There it is, 4.39. And, yeah, we've got a little bit of a bounce. The sell-off has paused for now. We'll see if that can hold. Volume definitely drying up on this bounce, though. Okay, and then you jump over to the dollar index, and the weakness is there. That's a daily. There's no strength in that daily whatsoever. Yeah, we've had some bounces occasionally. We were all the way down to 99.01. But when you look at this thing on a little bit of a larger scale, we're coming into a technical area of 100. That's where we're catching a little bit of resistance. But, boy, it looks like the force is down. No change of trend just yet. We got negative prices in the dollar. Dollar weakness at 99.78. 99.78 right now. Weakness in that dollar. And yeah, when you talk about yields, you're talking about 4.4. You jump over the golds on that dollar weakness. You got gold strength. Gold up another $15. And yeah, gold, as it says on the charts, continues to want higher price. 33.50 is the one-to-one expansion out there. You're trading this morning at 32.40 right now on that gold contract. All right. What do we got going on? And yeah, let's kick it off with, where were we? There it is. So, Boeing. China orders Boeing jet delivery halt as trade war expands. Now, this one's a tough one. Now, you take a look at Boeing, okay? Boeing, which was so interesting, actually caught an acceleration before the Wednesday reprieve, right? You dive lower from 180 to 130. You catch a reprieve on Monday of last week. Wednesday was the day that you actually got the reprieve on the tariffs, and right now we're basically back to 153-ish. Okay, you're coming back almost to the lows of March. We'll see where we go. Boeing going to be off by about $6. Now, look at the volume in these markets. All right, sent out in Market Insights this morning. If you want to check it out, folks, check it out on the newsletter tab at TFNN. We got volume drying up. All right, let's take the open interest off there for a moment. We'll slide this up for some clarity. We're at the 50%. Which was the lows of March 13th. Let's take that off for some clarity. We accelerate lower with volume. Folks, this is exactly what was happening on this bounce into March 25th. Okay, you accelerate lower in volume. Look at the volume dry up on the bounce. Where do we dry up to? We dry up to the high. Where does it begin accelerating? Quality volume to the downside, even more pronounced than the March action. What's happened on the way up? Look at it, right? Wednesday's acceleration, 2.8 million contracts in the S&P. Thursday, 2.4. Friday, 1.6. Monday, 1.2. See that? 2.8, 2.4, 1.6, 1.2. Not really a sustained acceleration. Now, one of those days was a day downward, but that's the trend, okay? And here we are today. We'll see if we get some follow through. But right now, this market, we're facing some resistance. You know, you're talking about 5,500 is the area to the upside. That's the low in March. We got your backs against the wall. I think this market is facing some headwinds to the upside right now, even if it's just on China. Okay, in terms of the headwinds, they're ratcheting up. You see Boeing getting hit today. You get the Dow off by 51 points right now. What else we got going on? Well, it's tax day, folks. Certain states, you have a little bit longer. I think in Florida, if you haven't filed yet, I think it's May 1st. Consult your tax professional. I'm not giving you tax advice, that's for sure. But guess what? Even if I was, and I'm saying this sarcastically, don't take it seriously, but who's going to catch you when the IRS has less people? Interesting to take a look at it, right? What are the tax receipts going to look like? Tax days? And yeah, the IRS has less employees. If you're pushing the limits, people are probably going to push the limits as they normally do already. But nonetheless, 7,000 people terminated the IRS. And I'll pull up the statistics sometime. You know, when everything got so political, was it 4 years ago? I forget when they were hiring a bunch of IRS officials. If you look at like where that force of labor was many years ago, they have less employees than they did decades and decades ago. We've all dealt with lines in terms of phone calls, especially during COVID. Couldn't get a hold of anybody. Nonetheless, analysts have warned that in terms of laying off IRS employees will drive up tax avoidance as well as taxpayers' fears of audit eases. Yeah. But we'll see how much. It's tax day. Get that extension in or get those taxes filed, folks. So we jump to some of the airlines. Talk about a reversal of fortunes. American trading at 957. So American, they're going to make Wi-Fi free for 2026. Always interesting, right? It's going to be sponsored by AT&T. It would make sense. It always kind of irks me that you're paying for such extraordinary fares, but guess what? It's par for the course. But is this going to be a change? I don't know. But you got JetBlue, Delta, and most recently United, and now you get American, free Wi-Fi. Maybe it's just reached the point that it's cheap enough that they can sell a sponsorship and gain a little goodwill among their members. Yeah, sometimes that's tied to your loyalty program if you're an airline, but nonetheless, United in the process of outfitting its fleet with SpaceX, getting in with Mr. Elon Musk. All right, let's talk a little bit of zero-day options. Yeah, fueling unprecedented volatility in Wall Street. I mean, talk about a clickbait article. Folks, it's not unprecedented volatility. It's not. We've been here before, okay? We were here in the last 5 years. It's not unprecedented. I mean, volatility-wise, we weren't even there 5 years ago. You check out the VIX, and we were there in the August unwind, even higher. Okay, so we didn't even reach that level, let alone you pull up the ES and you go back a 5-year weekly, you got to pull back from 4,800 down to 3,400. That's 1,400 points on a 4,800 point index. That's a volatility pullback more than we just had in this market percentage-wise, folks. But we'll talk about zero-day options. We'll talk some other equities, folks. We'll talk some Uber and Waymo as they're getting ready for Atlanta. Stay tuned, folks. We'll come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets open. You're looking at S&P. Opens basically flat to the tick. We're at 54.40. NASDAQ 100 slightly in the green. We got Boeing. Oh, I'm sorry. Market's not open. I'm one step ahead of me. We got 11 minutes. We got 11 minutes. No wonder. 11 minutes to go until that opening bell, folks. There you go. And, you know, talking about the tax receipts with the IRS, right? And you make the case, okay? And we got YouTube, you know, talking about, folks, it's not a leftist talking point, okay? The numbers aren't going to lie. Just because you're taking in more money, we have a record economy. That doesn't mean you're actually making sure everybody pays their taxes. There's always some nuance to the truth. The conversation, okay, the nuance is always the difficulty in between, right? The truth always lies somewhere in between. You can't change the tax code because we don't need it. We just have to correct the loopholes. Do you know how loopholes get created and solved? They get solved through actually applying the tax code. There's no way that laying off all those people is going to lead to greater tax enforcement for the people that should be paying their taxes. And most of the time, folks, that's not you or I with a W-2 out there, okay? That's people with very sophisticated tax involvement where you're employing strategies that flirt the line. Okay, they might not be criminally, and they probably aren't, but they're applying strategies that might not be per the levy of the tax code. And that's where you need to have pushback from actual people in place. Can AI solve everything? Of course AI can solve everything. But how far are we going into the future? That's not a reasonable argument, on the contrary. Okay? That has nothing to do with anything, Dark. That's literally a whataboutism. Okay? That's a whataboutism. Folks, he's saying, whoa, what about the tax revenue right now? That has nothing to do with anything I'm talking about, Darth. Talking about talking points. We'll move on. Nothing to do with anything I'm talking about. What does that have to do with if people are actually paying the taxes? So what if it's a record high? Has nothing to do with what I'm talking about, buddy. You're way off. You got to call it like it is, folks. Okay, these whataboutisms that have nothing to do with anything that anybody's talking about, call it like it is. That's not political, man. That has nothing to do with anything I'm talking about. Okay? Let's have real conversations. Laying off thousands of workers just because you get your tax return on a timely basis has no bearing on anything. Okay? Show me how we actually take in the taxes we're supposed to pay for the debt that we have that future generations have to pay for us. Okay? Yeah. We'll see when the numbers come out. We'll see. All right. What else have we got going on? So we're talking about zero-day options. Yeah, you talk about it. 8.5 million in April. That's the daily number. Now, here's what I'll say, folks, okay? A lot of these options are so cheap. That's why people love them, okay? Yeah, you're talking about trading volume, 8.5 million, 23% jump since the beginning of the year, 7% of the total volume in the U.S. option market. But the real value when you're talking about trading zero-day options is that people love them is they're so cheap, okay? They're so cheap that's part of the aspect of this. And yeah, you're going to drive volatility. Anytime you're getting that type of action, you're going to drive volatility in terms of momentum, and momentum is a real deal across the board. All right, let's talk a little bit of Uber. Uber shares, this thing, you talk about a beast, man. Look at this channel, right? You break above it, you break below it, we're back within it. It's an art, not a science, folks. That's not a well-defined channel, but nonetheless, you get the trend, right? We're breaking above it, we're breaking below it. This is talking about from 2022, but Uber shares right now, you're trading a little bit higher, but the future is going to be wild, man. And here we go. Uber. If you want to get on a wait list in Atlanta, get on it. If you feel like riding in cars that have no drivers, man, it's coming. Uber opens a wait list for Waymos in Atlanta ahead of the summer launch. And how about a 100,000 square foot depot, 5 miles from North Downtown Atlanta? And yeah, they're talking about at least 50 cars. Seems like they can probably put more than that, right? But nonetheless, why are you parking cars? They should be out there picking up rides, ideally. You know, ideally, that's the key. You just pick up rides across the board, and you never park in the car. And it would seem like that's where the future is going, folks. But guess what? Just like I say, AI isn't solving everything just yet. The future's not here just yet. It's going to take longer than we expect for that transition to take place. But when you think about how much money you spend on a car, I think about it all the time. Whether you're talking about your payment, you're talking about the gas, you're talking about insurance, you're talking about repairs, tires, oil changes, brakes, and then you're talking about you get into an accident and you have this risk out there. You take away all of that with ride sharing. It just needs to become a little bit cheaper and a little bit more available, but we're right on the cusp across the board. Yeah. Pretty exciting. Uber's strong, man. You check out that acceleration the week of February 3rd. We do it in volume. You pull back on lighter volume. We're pushing that again. Uber shares trading at 73.15 right now. Lyft, different story, man. You know, you can make the case that you're at about $10. Your back's against the wall in Lyft. But if you're looking to get in that market, I get in Uber right now. And like anything in this market, folks, just set your stops, okay? That's the dicey part about getting into a market that just traded from 10,000 to 20,000 in the NASDAQ 100. Get some stops in. That's what I would suggest, no matter what. Uber shares, yeah, you're priced for a lot of growth, man, okay? You were just trading at $22. You're at 73. But get those stops in, and you might be able to ride some of these equities even higher. We'll see where we go. I say might, as in the trend is up. Don't be afraid to get into these equities. We're already so much higher, but set some stops. Take a look at TJX, okay? Now, we're in this equity and market insights for disclosure, okay? We got a nice execution. Actually, last week, we got in there at about 119.75. We're at 130. And again, same deal, right? How do you look at this equity? And you say, man, I'm getting into this equity when we just traded from $53 up to $120. But yeah, you're in a well-defined channel. Looks like we're trading to the top of that channel on TJX right now, which would be about 135. And when I got in it, we had a tight stop. And right now, we already moved the stop up to break even. You got a nice entry. Don't give anything in this market. That's what I would say. Don't give anything in this market, man. And TJX trading a little bit higher to 131. Another one's Mickey D's. If you're looking for solid channels, I brought these up a couple times. This one, I think we're pushing like 10 years. Yeah, we got to go back more than a 5-year. Yeah, 10 years. That's what I thought. Mickey D's. Folks, we're coming up on a 10-year channel in McDonald's. Whew. I think of our man Bud Rolfs. If you're not familiar with Bud, folks, he was a newsletter writer, a host at TFNN for probably a decade or two. And he was the channel king, folks. And every time I see a channel it's so defined like this, boy, I think of Bud. And yeah, Mickey D's, 10 years. And you're only talking about a channel that's about $50 wide. And meanwhile, the channel takes you from 100 to 315 so far. But you're right in the middle of that channel right now. You want to look for the lower or the top portion of those channels, top boundary of those channels. But Mickey D's and TJX, two of the best channels out there, man, to the upside. All right, as we come into the opening bell, let's see where we're trading. Apple shares. Giving back some of those gains, continuing. Check it out. We're almost back to where we were on Friday before they got their reprieve from China tariffs. Almost like it was baked in. Almost like the market knew that there was no way those China tariffs were going to fly on Apple. That we weren't going to be paying for $3,500 iPhones. Market knew it, maybe. Stay tuned, folks. We'll come back for the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. Markets open in the green. Russell in the negative. Russell's been weighing down, man. Russell negative by 2 right now at 1890. We got the NASDAQ 100. We're positive by 61. Dow positive by 61, NASDAQ 100 positive by 50, and the S&P is positive by 10. Let's get back to a 5-minute chart. We see the open, a little bit of an acceleration coming into that opening bell, and we open at about 54.50 in the S&Ps. We can check out some of the car companies on yesterday's news. They get a reprieve from some of the tariffs, and we're giving back some of those gains. You got Ford down about 1% right now. GM down about 1% as well. How about Ferrari? Not in the same deal? Yeah, this equity. Take a look at Ferrari, man. I was looking at this last week. You know, if you're trying to get into Ferrari, folks, 400. So now, same deal. Like I was saying, set a stop. Okay, you get into this equity of 400. You were traded at 167 in 2022. But the nice part about this 400 area, you got your back against the wall here in Ferrari. Race 433.30 right now as markets catch a little bit of a lift to kick off the session. And yeah, Trump gave automakers a tariff break. But this talks about the uncertainty, okay? And even in their tariff break, how are you claiming certain deductions, billions of dollars, uncertainty? That's the point, okay? You had a 25% tariff. He gave them relief. They'd be allowed to pay a lower tariff based on the percentage of U.S.-produced parts and materials used in a foreign-built vehicle. But guess what? The details aren't there. What exactly constitutes U.S. content or how it might be determined? Okay, you're seeing a level of uncertainty that's permeating even as reprieves are given. We saw it yesterday with Apple. Okay, Apple couldn't even get their market opened by the time the president himself, that's a weekly, had pushed back on the own reprieve that he gave them, and Apple gave it all back. This is a headwind, uncertainty. The market hates uncertainty more than anything, folks. Okay, and yeah, it hates financial crises. It hates all of that. But it can't stand uncertainty because what the market wants to do is price the probability of future events. And if you can price the probability of future events, then you can assess your risk, okay? And that's very difficult to do. And so what they do is they scale back because there's risk that's very difficult to quantify. And that's a very difficult one for many people in the market. If you can't quantify a risk, then oftentimes there's risks that you're just not willing to take. And you take the other side of that, which is the opportunity cost, right? There's an opportunity cost from not trading. And then, of course, there's the cost associated with trading when there's risk. And those two are battling it out right now. All right, we check in on gold, up about $12. Let's keep our eye on yields. 110.24, that's a weekly, but checking out the daily, yeah, a little bit of a bounce there. And, you take a look at the weekly. How about that weekly volume? Now, if the market corrects itself, that would be a good thing in the 10-year because that was the most dicey action going on. But the dollar, yeah, dollar's struggling at 100, folks. Decisive area, that was the lows in 2024. It was almost where we were. We got all the way down to 100.61 in the end of 23. We got right down to this price level in July of 23, and we weren't far off from there in February. And you back it up even more, you see you break below there. 90 is the next stop, man. There's nothing in the way. You break below this area, we're going to 90. So important area for the dollar to hold. We jump over to crude, 61.53, basically flat right now in the session. And we got the S&Ps up by 6. Dow rolls over a bit. Let's check out how Boeing is doing, as China's not buying any more Boeing jets for the time being. But yeah, all we're doing is we're almost back to the middle of the day yesterday. A lot of this baked in when you see it to that degree, right? As in Apple, yeah, they catch quite a lift, okay? But we were trading at 200 on Friday when there was no reprieve of the tariffs, and we were trading at 200 as of 8:30 this morning. So fear on the downside baked in, but also some of the optimism in these equities baked in. As in, you get the news, it's buy the rumor, sell the news on some of this stuff. All right, what else did we talk about? Yeah, this one's interesting from a user data privacy standpoint. Okay, so Apple, they're going to begin analyzing user data on devices to bolster AI technology. Now, here's what I found myself saying. It's quite a convoluted way that they are differentiating from your data versus their data versus using your data versus not, okay? Today, Apple trains AI models using synthetic data. They don't use your data right now, okay? That's meant to mimic real-world inputs without any personal details, but the synthetic information is not always representative of actual customer data, making it harder for them to work. It would make sense. You know they want to just train it off of all their data, right? I'm surprised they're not right now, actually. But yeah, I can imagine the stories that they don't want. Apple's all about privacy, and the last thing they want is that they're taking everyone's data and they're going to use it forever. That story. But listen to the differentiation, okay? The technology works like this, okay? The new approach is going to address that problem while ensuring that user data remains on customers' devices and is not directly used to train AI models. You're going to scratch your head after you hear how this works. The technology works like this. It takes the synthetic data that Apple's created and it compares it to a recent sample of user emails within the iPhone, iPad, and Mac email app. By using actual emails to check the fake emails, Apple then determines which items within its synthetic data set are most in line with the real ones. It sounds like they're using your data to train AI, does it not? These are differentiations that are going to become commonplace. But how is that not using your data? These insights will help the company improve text-related features in Apple Intelligence, summary notifications, and yeah, it makes sense. When they create data, their goal is to create good data. So what are they going to do? They're going to use your data, check the fake data they're creating, and use your data to correct the fake data. Seems like they're doing it. It's just one step removed, right? So I wonder if this is going to become something they start to deal with in terms of headwinds. They've based themselves on privacy, and they're going to have this story become something when you start dealing with, hold on a second, they're going into my emails, they're going into my texts, they're checking it? Yes, they are. That's going to be the deal. Yeah, the new system could theoretically improve Apple's models. Yeah, theoretically, of course it can. Data is everything right now. Yeah. And they've seen their AI team lag. It's bringing privacy-centric ways. This is going to become a big topic, okay, to improve the models used to power other Apple Intelligence features. And yeah. The features are only for users who are opted into device analytics. I would suggest opting out of those if you haven't already. And I love Apple, but why would you do that? They got enough data. Why would you ever share your data with anybody if you don't have to? Sometimes you have to use a service, but if you don't have to, don't give it to them, folks. Because this is just going to become more and more, and there's no way that Apple doesn't want all the data. That's where the future is. Data, AI, and energy consumption, and computing power. That's it. And they got a lot of data. S&P's up by 18. All the markets in the green, folks. Bitcoin up by 1,000. Crude up 10 pennies. We'll come back, talk some equities. We'll talk some Magnificent Seven. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps accelerating higher. We're coming into the highs of yesterday. That high at about 3 o'clock, 54.79. We're trading at 54.71 right now. You see that volume acceleration on the open. NASDAQ 100 up by 140 right now, 19,075. What I will say is these are important areas, right? We're coming into the lows of March 13th. That area, only about 100 points, about 90 points from where we're at right now. 19,081, so important technical area, right? Just draw it on your chart. Right there, man. Even if you don't have the Fibonacci on there, let's take that off. That's a nice technical area, right? You get a bounce, we get a bounce. Now this has turned into resistance, and we'll see if we can get it, but watch that volume, man. NASDAQ 100 drying up and dramatically on the S&Ps. We'll see if today can be a game changer, but light volume of only 1.7 million contracts yesterday as we caught a little bit of a lift. And it is interesting when, you're talking about a lift for a pre from Apple, and Apple can't get a bid going with the market today. Okay, let's jump around. We have Apple flat, Amazon down by 0.2% right now, Microsoft shares positive by 1%. There you go. We jump over to Google. Google's flat. Meta shares up 1% right now. We jump over to NVIDIA, trading up by 1% as well. AMD up by 1.3%, but look at that. You don't have to be a master technician, as they say sometimes, folks. That's a pretty well-defined channel line, even if you're just talking about trends. Maybe you make the case, you break above it. But you really want to get an acceleration on volume. You want to get it, this is the wrong way. That's a nice break, actually. Look at that volume on AMD on a daily basis. Now, yeah, of course, Wednesday is going to do fantastic things on many charts, folks, but the price and volume don't lie. All right, that could be a breakout. And if you're buying breakouts, you want to let it accelerate higher, pull back on light volume. And right now, we're accelerating on lighter volume these last few days. We want to break above this area, and that high in AMD is 97.91. And boy, it's going to take some force to break above there with volume, as we did 97.8 million shares that day. Yeah, we did half of that, a third of that yesterday, almost at 36 million. Keep an eye on the dollar. You got a slight green bar at 99.88 right now, and we keep our eye on yields. Yeah, about 110.26 at 4.39% right now, the yield on the 10-year. We check in on Bank of America with their earnings. There you go, up by 4.2%. We catch a lift coming into the opening bell. Mr. Moynihan, maybe he's talking things up. I'm sure he is, but the market's liking it on the conference call. As you just traded from 37, we're trading at 38.24. We had Citi out with their numbers. Similar story. Citi up by 2.5% right now. Following Goldman, the banks are liking this, up by 2% right now. JP Morgan, up by about 0.7%. Look at that. Boeing catches the lift. Remarkable, right? That was baked in. The bearish case in Boeing was baked in that, man, things are really ratcheting up with China, and that's going to be a market that they risk losing. We're trading at 157 right now, only down about 1%. We do have green across the board right now. Check back in on silver. Silver trading up 0.3% right now, 32.28, but at a critical technical area yet again. And realistically, the critical technical area is 32.28. But you got this area between 34 and 35, which are the highs last year and the highs this year. It's going to take a lot to break through that for silver. And we were talking about it in the Tiger's Den last night. Sometimes, I found myself, and you always got to say, folks, the Treasury Secretary is a cabinet official for the president. So, of course, they're going to be talking about the president's plans and talking it up, rightfully so, across the board. Okay, Janet Yellen, everybody in there. That's their goal. That's their job, not even their goal. It's both their job and their goal. But in his interview, assigning that the VIX has topped out, all I'll say is that we didn't even get back to the highs that we saw for the VIX in August of last year. And if you don't remember it, folks, that was quite a wake-up, okay? We woke up Monday morning. Markets were down 5%, almost limit. It was kind of a surprise, and then it dissipated instantly. You compare it to some of the VIX rises that we've had, and I got to go back even further than that, in terms of COVID, much more sustained, okay? But after COVID, we have peaked out. After that one COVID spike, you go to 2020, we never saw anything like this, even as the market accelerated lower. Okay, we're trading at 28.72 right now. We have lift in this market. But it's almost an ominous sign when the Treasury Secretary has to tell you that the volatility has peaked. If they have to tell you the volatility has peaked, maybe it hasn't peaked, right? I was watching something this weekend, and I saw an ad, and it was something. I think they were showing Game of Thrones. Maybe I was watching some HBO. I watched that season 3 of White Lotus. Interesting series. It got me hooked on it. It did, but interesting series. Not for everyone's liking, I'm sure. Interesting. That distracted me there for a moment. What was I even going? We'll get there. All right. Let's check out Uber shares as we jump to some of the car companies as well. Uber's up 1.4% with the market right now. Ford down 1% right now. GM down 0.7% right now. DoorDash up by 0.7. We jump to some of the other tech stocks. Salesforce up by 0.5% right now. Oracle up by 0.7. I will say, I listen to Bloomberg all the time, even in the car. I love Bloomberg News. And they have Oracle Cloud Infrastructure ads everywhere on Bloomberg Radio, man. OCI, Oracle Cloud Infrastructure, save 50% or more versus competitors like AWS. It's something like that. It's a great ad. If I was in the market and I was paying one of their larger competitors and I was hearing, there's no way that Oracle is not going to be a competitor there. A lot of that priced in at 135, but you look for the acceleration in terms of 198 to 120, man. They're a player and they're going nowhere. And this stock, you check out. Now we go to price and volume. It's a nice bounce. Okay, 71.7 million shares. On their earnings, going back to March, you have a bar out there of 87 million shares, and that bar goes basically from 140 to 150. 150 is going to be an area that you're going to face some heat in Oracle. Let alone that acceleration on January 20th. And of course, it doesn't hurt. When you have Larry Ellison sitting at the president's right side, right? Making deals with OpenAI, making deals with SoftBank. So I'm always watching Oracle right now. From 120, 135, nice bounce there. Market's catching a nice bounce. One more segment, folks. Stay tuned. S&P's up by 31. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets in positive territory, catching a lift. S&P's up by 36, NASDAQ 100 up by 170, Dow up by 190 right now, even getting weighed down a bit by Boeing. We got the dollar, technically up 228 ticks. You take a look at the monthly, all right, that is quite a monthly. And you talk about a run, man, right? From that 2000.com, you catch an acceleration, and then you go from 120 to 70, the moves that are possible, man. And then you go from 70 to 115. But boy, we're at a pretty important technical area. We're testing 100, nice round number, and you can see how many times on this chart it's acted as either support or resistance. Now that's a monthly. You go back to a daily, okay? Yeah, technically green, but no change of trend just yet, as the dollar will extend that line to the right. Is pushing 100, and then you talk about dollars and yields, okay? This one out this morning from Bloomberg. Dollars linked to U.S. Treasury yields weakens as confidence cracks. Now, the kicker here is that this has only happened 3 times. Let's see. I was reading this one this morning, man. This one's an interesting one. The dislocation between the dollar yields and traditional risk is striking. Now, here we go. We'll read both of these, and this is how we'll end it, because I'm keeping my eye on the dollar most importantly. Bloomberg Dollar Spot Index fell last week by the most since November 2022. Okay. Roughly 2/3 of option traders in the past week targeted a weaker dollar against a euro, yen, Swiss franc. Last week was only the third time in more than 50 years that the dollar declined more than 2.5%, while the 10-year Treasury rose by at least 25 basis points. Okay, you don't have yields rising and dollar weakening like that. It's only happened 3 times. The times it happened: July 1985, May 2009, okay, and last week. And both of those prior episodes were followed by sustained dollar weakness. So keep those spikes up, as we got some dollar weakness right now. But markets in positive territory. Folks, thanks so much for kicking off your trading day right here with me at TFNN. Stay tuned. We got Basil Chapman coming up next. Live programming after that. Steve Rhodes, folks. Jacob Shoup this afternoon. And I'll see you tomorrow at 9 o'clock. Thanks so much, folks. Have a great Tuesday. We'll see you tomorrow. Stay tuned for Basil.